Hey there, it's Nick with CBH Homes. I wanted to give you some info today on helping you decide your budget when purchasing a new home. So one question that we get asked a lot is what's going to impact your buying power. One of the main things that's going to impact your buying power is your monthly income and then your debt to income ratios. Lenders typically require the debt to income ratio to be right around under 50%. So they'll take those numbers into consideration when they're working on your pre-approval and helping you determine exactly how much you can qualify for. One thing to keep in mind is that your pre-approval amount may not be the comfortable monthly payment for you each month. So say you're approved for $450,000, but the payments work better for you at $425,000. It's definitely a recommendation that we find a home for you at that $425,000 mark, because we want to make sure that you're comfortable monthly paying your mortgage and covering all your other monthly costs. So what are you actually paying for in your monthly mortgage? Your monthly mortgage is determined by PITI. So your principal, your interest, your taxes, and insurance. So let's dive in more to the principal, interest, taxes, and insurance. So the principal is the base loan. So say you buy a home for $425,000, you're gonna subtract your down payment, say it's $25,000, so $400,000 is the principal loan balance. Then you have your interest on top, which is the cost that you incur for borrowing the money from your lender. Taxes and insurance are also calculated in there. So taxes are set by the city or the county, and then your insurance is the homeowner's insurance that you need in order to protect your home. When you are shopping around with your lender for homeowner's insurance, super important to get a couple quotes. There's a lot of factors in play, lots of different rates out there. And so that's number one. So when you're running numbers with your lender, don't ever ask what's the price. Make sure you're asking them what's my all-in monthly payment. One thing to keep in mind on top of your monthly payment is that there are going to be HOA dues associated with the home. These are in most cases paid yearly or quarterly. A lot of lenders will factor them into your estimated monthly payment. However, the HOA companies will send you a bill at the beginning of the year, and it's typically due by end of January. Before you seriously start shopping, ask your lender and your CBH sales representative what promotions they're running that month. Those credits and that promo can be used to either pay for your closing costs or even buy down your interest rate. On top of that, we can use those credits towards CBH upgrades that we offer. Here's a quick breakdown to keep in mind when you are starting to shop for a new home. Number one, make sure you get pre-approved with your lender. 2, run estimated monthly payments based on that pre-approval. 3, make sure you ask your CBH sales rep what incentives they're running that month. And then number 4, get out there and start shopping.